Hello, everyone. Stocks decided to pull back today, but we got a very nice rally off the intraday lows. Unfortunately, in the final few minutes of the hour of the session, we couldn't hold on to the gains, which would have given us very nice wicks, bottoms, tails, whatever you want to call your chart pattern. I could care less. Call it whatever you want. Spinning top. It's not, but whatever. But S&P 500 only down 0.98%. The best and most important data point in the day is that volume came in lower than the session before and below average. The Nasdaq, similar situation, down 1.01%. Not an amazing move off the lows, but like I said, if we wouldn't have had that slight weakness into the end of the day, it would have been another nice candle reversal on our daily price graphs. But the most important thing is volume was lower. The Russell 2000 did lead to the downside, but overall, 1184 where it closed above the 1181 low a day on Friday's session. So that's the good news I'm going to take away from this session, since that Russell 2000 was the worst index on the day. But overall, the pullback seemed good. Seemed that there was a little bit of fear generated with the pullback. And then as we ride off the intraday lows, everything looks pretty solid. And one of the most important data points from tonight's scan is that we have new long positions, and there were a multitude to choose from. If this was really weakness, I don't think you'd be seeing that. And if you would be, we'd be seeing it in more lower quality stocks. But all of our long signals today can some quality names, and then one pre-perfect speculator scan quality names. But first, let's go over the ones that I'm passing on. PAR, at one point intraday, this thing was only up to about around the, $6 area. So it looked like it was going to be a definite long by the end of the day, as long as it closed near its highs. Unfortunately, the damn thing ramped into the close, closing almost around 640, up 6% on the day. That's just too much for a chart pattern that's already up this much. Arithmetic chart just shows you really this isn't the kind of chart that you look at the pattern throughout 2014 and then 2015. This isn't really a pattern that you chase on the breakout. However, if it would have closed below the 615 level, which is where it was the most I was going to accept before going long, PAR would no doubt be a new long position, but it can't be because it's just up too much with that overall technical pattern. LGND looked like it was going to be a new long signal, pocket pivot point signal, but earnings were after the close, and the last time I checked it was at 93, which is putting it below the low of day of today's session. Can't be a long. W was a pre-perfect speculator scan quality stock. It's ones that catch it that aren't quite at $50 yet. It's at 45. Looks good. I would love to get long this name, right? Looks good, solid. Earnings are tomorrow before the market open, so you can absolutely forget W as being a new long. Also, TSYS, can some quality, nice earnings winners, looking good, but overall, it's just too far away from the 50 and 200-day moving average. And when I really look at the stock to see if it does have any extreme run-ups in the past, to see if it's worth chasing, I don't see any going back for quite some time. And in fact, I have to go all the way back to, strangely enough, 2008 whenever it did well. But it just is not one that seems to run whenever it's overextended, so it's definitely not one I want to take. And then recent earnings winners making moves today, Pod. That's pretty nice and buyable, but you know what? For the fundamentals that I see and everything, I'm going to probably regret it because of the low risk. But I'm out of cash, guys. I'm out of cash. I can't put any more money to work. So unless it's super high quality or extremely beautiful, I don't want to take it. And that's the problem with Pod. Is that Max Green Bop down there? Is that a huge volume surge today? No. Is it can some quality? No. Guess what? Can't go long. Zen, love Zen, but you know what? Hindsight's 2020. The buy should have probably been on Friday with that bounce off the 50-day moving average. However, I don't think it was in my price volume BOP scan, but I would have found it in my green BOP price up volume above average scan, which I rarely scan, but I always do it on the weekend. So technically, could have gone long, but I was like, you know what? This one probably needs a few more days to base out, and then it'll give me a long signal. Said today, it looks like it's already going to resolve higher. But Zen, got to pass on that also. Once again, do you see Max Green Bop in a huge volume surge? Nah. And then KCG, very nice. Love the pocket pivot point signal, but where's that huge surge in BOP? And it's not a breakout above recent resistance, so I'm going to pass. But KCG, Pod, and Zen are the best I'm passing on, and YDLE also because first off, it's been bought out by I believe these guys. If I can, I hope I got the ticker symbol right. Yep. So these guys bought them out, and so really that's what it is. But I guess that there's lawsuits against them, so it makes me wonder if YDLE has room to run. I could care less. Earnings were after the close today, and the stock's doing nothing, and that about sums it up because it's been bought out in August. But it could still go higher, but just not into it. So the new longs are Rate. Rate is a CanSlim quality stock, very extended, but our final sell stop is 1406. So this one's going to have to continue to zoom. Maybe it just bases out sideways and then goes higher again, kind of like what Zixi did. But Rate, confirmed CanSlim quality stock. It was in my new high scan on above average volume, which I really don't care about. And then the price volume BOP scan did confirm it. So 2% for CAN, 1% for price volume BOP for a 3% position. But Rate looks good overall, just doesn't look the best. It's kind of risky, whatever. And then Hubs, this is a pre-perfect speculator scan quality stock. It's not quite up 2 times off of its lows. It's up 1.5 times off of its lows. So that's why it's not in the main one yet. But very low risk entry area here. First sell stop below 50.46, final sell stop below 49.73, and we're wrong on this high quality name. Huge sales growth. Assume one day it's going to have earnings growth and/or it's going to be bought out because it's a perfect speculator stock scan. And most of the stocks that make the scan that don't make money that are higher price have this happen to them. ZSPH was a perfect speculator scan stock, and boom, there it is, gets bought out. Doesn't make any money, so that makes sense. And then also, and by the way, let's just go back to Hubs really quick. 2% for being in the pre-perfect speculator scan, 1% for being confirmed in the price volume BOP scan. See, it was up 0.02% today, so it barely made that scan, obviously. Barely made any of the scans. And then LOAN, it's a CanSlim quality thin stock, bouncing right off 50-day moving average. First cut loss below 409, final cut loss below here at $4. It's CanSlim quality. It's thin, so it's a little risky, but you know what? It's a credit service stock, so I believe that we can go ahead and put the full 2% into it. So limit order at 426 on loan, 2% of the account capital. And then we got an add position signal today in Zixi. Zixi has been a long signal since when? I don't know, not there, not maybe there. Is that when I went long? That doesn't look right. That probably looks like, that's probably when I went long. So Zixi's been a long signal since 1026. This is moving up. Pulled back nicely, and now pocket pivot point signal on above average volume with it holding that max green BOP that it got back yesterday. So that's excellent. 1.5% long position for Zixi. It's a 1% for being CanSlim for an ad, and then it was confirmed in my price volume BOP scan surge. So that's going to be another 0.5%. So Zixi 1.5%, loan 2%, Hubs and Rate 3%, and that's it. Some house cleaning, MLAB, technical 50% end of day sell signal closing below the 50 and 20-day moving average. The below average volume means that you don't need to use 109.19. You can now use the low day of the original signal date. The first sell stop was 105.03. I've moved that up to 108.01. The final sell stop in this entire position remains at 100.11, but I doubt that will happen. I bet you we'll be out of it before it hits that because we'll get like a heavier above average volume sell below the 20-day moving average, a 50-day moving average probably soon. If it doesn't cut that ultimate low, then those lows of that day when it violates the averages will be the new sell stop. And then HELE, 50% sell stop below today's low a day with the crack of the 20-day moving average on about above average volume, close enough for me. And my final sell stop will be those immediate lows following my original long position. I've already been knocked out of half of it. So I don't know how many shares I have, but if I have 100, I had 50, so now 25 below here and 25 there. It's possible once again that we'll be knocked out of the rest of it before it even gets there, because an above average volume close below the 50-day moving average without violating that level would mean it's a full sell. And then VLRS, big violation of 20-day moving average on huge volumes. So today's low day becomes the final sell stop, 15.79, which means we'll leave the entire position at least with a gain. And then Twitter failed today, but I've been long gone out of Twitter for a while. I think it was maybe at the market open back here, but it's finally failed today on an end-of-day basis.